100K, 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 every day, we don't play, here to stay, we here to stay, concentrate, anticipate, it's okay,
Hello, my crypto juggernauts and family. Welcome to the Mx3 Crypto Report, your destination for relevant crypto information when you need it the most. My name is Michael, and we have Mike.
Hello, everybody.
And we have Mark.
Hey, everybody.
And we are Mx3. Thank you for tuning in today. And as per usual, please subscribe, give us a like, hit the notification button, and leave a comment. We appreciate your support as we continue to give you more valuable content. All right, let's get to the meat and bones. Potatoes are hot.
All right. There's a face we all know and love.
Yes. So on today's episode, we're going to watch this video about Bill Gates and his, as it says in the title, Bill Gates is selling his stocks and the reasons are terrifying. And we're just going to analyze this in the midst of this bear market and see if this makes sense or if there's any juxtapositions to what Bill Gates is doing correlated. So, Mike, I'm going to let you hit that play button and we'll just go through this video with the viewers and see what we can dissect from it.
All right, let's get started.
Eventually will result in an economic slowdown. So I'm afraid that the bears on this one have a pretty strong argument that concerns me a lot. You avoid taxation or any sort of, government rules about kidnapping fees or things.
Until we get there, which we're absolutely not.
Bill Gates has been selling his stocks to prepare for one of the worst economic disasters in history. Gates is known for being a CEO, and he's even better at capital growth. Through the help of his fund manager, Michael Larson, Gates managed to make $50 billion over the past 20 years. Gates and Larson not only made billions from the bull run, but also successfully prepared for the dot-com bubble and the 2008 recession. This has allowed him to consistently beat the S&P 500 and grow his wealth to new heights. Gates and Larson are now aggressively preparing for what will become one of the worst recessions of all time. It's no secret that the economy is in a tough position. The US economy is undergoing accelerating inflation, the lowest consumer sentiment in history, the Russia-Ukraine war, low consumer savings rates, and record high debt levels. The government pumped trillions of dollars into the economy in 2021. 2022.
All right, let's pause it.
And if you can kindly navigate back to where it put all those bullet points there.
Okay.
So, yeah, guys. So this video is telling us about, what's currently happening in our reality right now. We're experiencing high inflation, low consumer sentiment, the Russia-Ukraine war, low consumer savings, and high debt. And to me, this makes a lot of sense. I have talked to a lot of people about this, describe that, these are things that are more or less, Nostradamus type features of a recession coming sooner than we think, and I wanted to discuss this with you guys and see, is this something, are these certain points, things that we can overlook, or are these things that will actually we actually have to be more concerned about moving forward?
In my opinion, they're universal. And like you mentioned, there are a lot of things that correlate to different spaces, I guess is the best term I can use. Because a lot of people are wondering, why is all this happening in the NFT space, in the crypto space in general? And these are common denominators. These are things that affect a lot of different, areas in not just investing, but in life in general. So to me, I call these the common denominators.
I agree.
I totally agree also. You mentioned, are these going to go away anytime soon? I don't believe they are. These 5 things that's on the list, I'm just going to add one other thing, which is climate control. One thing that they don't mention is the climate. And as you know, there's a heat wave going on all over the planet right now. Europe is burning up. There's areas in the United States that's going through a heat wave like never before. Not only that, but there's lakes that's drying up at a record pace. Salt Lake City Lake is almost completely dried up. Lake Mead is almost completely dried up. So these things are contributing to the inflation. It's contributing to the wheat, the grain, everything that's being grown. That's contributing to that. So I don't think it's going to go away. I think it's going to get a little bit worse because not only that, it's going to affect the produce, wheat, grain, everything that's being grown is going to affect that. So I believe that it's going to have a pretty large effect on the inflation, the high debt. One of the reasons why people, and going back even 2020 with the pandemic, the stimulus payments were rolling out to people. So people had money and they were putting that money to, I don't know if you guys remember, they were putting that money toward credit card debt. People were paying off their credit cards left and right, like never before. So they were paying off debt at that time. But right now, with the inflation and everything else contributing, that inflation has caused people that go back into debt because they have to pay for groceries, which are, you have to pay more for that. Gas is higher. There's so many other things that's higher. And it's amazing that Bill Gates, he's actually able to see this happening and prepare for it. Just like I think the video mentioned that he was able to prepare for the .com event that happened years ago. He was able to prepare for other things that came up. And now with the inflation, with the pandemic, and I do remember him mentioning something about a pandemic before COVID-19 hit, and he said we weren't ready. So I think it's amazing that he's able to kind of predict these things and kind of call them out before they happen.
Or forecast.
Right.
Forecasting, because he's a sharp guy. He has access to tools and information that the average person doesn't. So, and the fact that he's making it public is, honestly, I have to give him credit for that.
Yeah.
All right, let's play through a little bit more of the video.
The government pumped trillions of dollars into the economy in 2021. 2022 is the complete opposite of that, with the government pulling back trillions of dollars out of the economy. Gates is especially concerned about the artificial trap that the Fed created for themselves. The economy is currently being hit by a double-edged sword. One edge of the sword is accelerating inflation, and the other edge is the massive level of government debt. The government now has 2 choices: to destroy the US dollar or crash the economy at the risk of popping the debt bubble. The Fed has decided to go with the second choice of slowing the economy at the risk of an unprecedented collapse. We recently saw the Fed raise interest rates by 75 basis points, which is the largest increase since 1994. This increase helps substantially with slowing inflation, but it comes at substantial risk. First of all, raising rates that sharply means that borrowing will cost significantly more for business investments and mortgages. Rates on the 30-year fixed-rate mortgage recently increased by the largest one-week jump in 35 years. If this increase in interest rates slows the economy too much, it could pop the existing debt bubble and spiral the economy into a recession or depression.
So since we last talked, small thing has happened. Russia has invaded Ukraine, and it feels like we're in a new world. We are going to be seeing higher energy prices, higher food prices for years to come. It seems difficult to see how this resolves itself very quickly. What does that say to you about the economic outlook for the next few years?
Well, it comes on top of the pandemic where government debt levels were already very, very high, and there were already some supply chain problems. And so it's, likely to accelerate the inflation.
Yes, that was really interesting because if I'm not mistaken, hasn't President Biden constantly mentioned the United States have about $1 trillion surplus. I remember him mentioning that on a couple of occasions, that the United States had a $1 trillion surplus.
Surplus of money?
Yeah, so I don't understand when they talk about high debt. It's conflicting information, because on one hand, they talk about the high debt that the country has, and on the other hand, Biden keeps mentioning we're $1 trillion surplus.
I can't speak to it personally because I honestly don't watch the news, the U.S. news, put it that way, because I found that things aren't always reported, and I'm trying to be PC here, but I think what you're saying is a perfect example of why I don't, because depending on where that information is coming from will depend on how accurate it is.
Right.
And if you actually look at, I mean, U.S. has been in debt for quite some time.
Right.
So for him to say that we have a surplus, yeah. Well, what are we supposed to believe? What's actually true? And if we do have a surplus, how do we get rid of the debt?
Right.
Because that was certainly not reported on.
And that's why I kind of, threw it off when I first heard him say that. I kind of, chucked it off, because I figured, maybe he just misspoke. Maybe he made a mistake and said it. But when I heard him he mentioned it again. And that's why I was thinking, like, okay, he said we got a $1 trillion surplus, but the country is in inflation. Every country I see out there is struggling financially. So how in the world could the United States have a $1 trillion surplus? I don't get that.
Angel investor? That would have to be a real angel, wouldn't it?
Yeah, that would have to be more than one real angel for that.
Problems that rich world economies have, and force an increase in interest rates that eventually will result in an economic slowdown. So I'm afraid the bears on this one have a pretty strong argument that concerns me a lot.
The bear thesis that Gates is talking about makes complete sense. A surge in oil prices is strongly correlated with recessions. The gray areas in this chart are periods in which the US economy was in a recession. You can see how every time Brent crude oil crosses $100 per barrel, a recession almost always follows. Brent crude oil is currently at roughly $120 per barrel, signaling that a recession is coming. The reason why a recession almost always follows oil prices breaking $100 is because rising oil prices are a tax against the consumers. High gas prices take money directly out of the consumer's pocket. This not only leaves the consumer with less money to spend, but it also drastically lowers consumer sentiment. The University of Michigan Consumer Sentiment Index shows that the consumer sentiment is currently the lowest it has been since the 2008 recession.
And this is quite interesting for me. And this just goes back to market psychology for me.
Okay.
And the variables involved, whereby we have what has happened with the world events, such as the pandemic. Then we had trillions of funds being pumped into the economy by the stimulus packages. And then we also have the shipment wars or the port, going on, whereby the shipments have slowed down. And we also have the energy tyranny, whereby, we are not getting as much energy resources, and the prices are going up as we would like. So, but any which ways, I see that this is all going back to politics at the end of the day. I can see that with the consumer sentiment, the feds have issued okay, let me rephrase this. So let's talk about the consumer sentiment before I talk about the Feds. So with the consumer sentiment, I know that that is why we have seen a lot of market selling, because people are more reserved about what they are going to buy in these times due to the market psychology based on the natural resources like gas, food prices going up, et cetera, et cetera. Things are not cheap anymore, or if they were at a certain price, they're definitely higher than they were before. And so people are cutting back on a lot of expenditures than they would have a couple of years ago. And so the booms that we were seeing in these markets have drastically decreased because of that. And we have seen a lot of selling, not only in the crypto market, but in the stock market, et cetera, et cetera. And so based on that, then we also have this other dynamic whereby we have what has happened in the economy as a result from the pandemic. You know, we had trillions of government funds, which we all know is based on a debt system whereby the money was printed. You know, the money was printed. They didn't go dig up the gold and
Right.
give it to people. They printed it,
Right.
and therefore, since it's based on a debt system, it's directly correlated to, it's an inflationary thing. Because we printed more than we already had, we inflated the price of what we had. And so then the Feds is looking at that and they're like, okay, so what's it gonna be like? How they said it in the video, they have a choice to make. Do they destroy the dollar or do they destroy the economy? And as we saw, they said, okay, we would rather destroy the economy. Now, as I circle back, that's where I said the politics come inside.
Oh, yeah.
Because now they're making a political decision. And with that, they're trying to destroy the economy, or more formally speaking, they're doing quantitative tightening. You know, and with the quantitative tightening, they are trying to increase certain interest rates. The interest rates that these banks would go to get the money, get the money from the reserves from them, they're making it more expensive, and thus it trickles down to the rest of the economy through these banks. And so, with that being said, now we have a dilemma in which they are trying to tell people that by a certain day they're going to increase it by 1.4%. Speculative. What's it called? Speculative.
Speculative.
Yeah, speculatively, right? Excuse me today. Right. So they're trying to do that speculatively, that they're going to increase it by 1.4%. But the thing about it is that people have studied that, you know, these type of things could be political scare tactics in which, you know, during the pandemic, a lot of people changed their mindsets about a lot of things. A lot of people wanted to do the whole remote job work. A lot of people left their jobs because there was a boom in the economy through the stimulus. Even though the stimulus had there was an ideology behind the stimulus, and whereby, you know, because of the pandemic, people you know, how they were forcing people to stay at home and all that. Okay. But as a result, people had this extra amount of money being given to them. So a lot of people decided that, you know, they weren't going to go to work or do this and that and the third. And so then we saw that a lot of the job market, what happened with the job market, right? The job market, there was a lot of, there wasn't a surplus of workers. There was actually a high demand for workers in the job market during that pandemic time. So now the Feds are trying to make a political thing whereby they're trying to get more people into the job market, it seems, and they're trying to boost it up. But there's a tight balance between trying to increase the interest rate and then also destroying the economy. Because if I don't know the exact percentage, but if they increase it by, I think, more than the 1.4%, it could actually damage the economy to whereby the economy might not ever be able to recover from that.
Yeah.
So a lot of what they're doing is, I feel like what they're doing is scare tactics. They're bringing out the news that possibly they might do this, and then market psychology will react to it. And then we'll see people be more conservative with their funds. And that alone on its own will cause, consumer sentiment to come down, thus bringing back, bringing back the economy down a little bit naturally. And then when it comes back to the time where we hear from them September, then they're going to talk about the opposite of quantitative tightening, which is quantitative easing. And then we'll see the markets come back. I mean, what do you guys think about that?
I think that's a really good take on it, because there always seems to be, and everything. Honestly, I've kind of marked it. We've looked at this for decades. We've seen this back and forth. We've seen this play going on for decades in one way, shape, form, or fashion or another. And it's always a balancing act. It's always a balancing act. And to be honest with you, and I'll just be blunt, typically, no matter what strategy they propose, and in terms of whether it's a scare tactic or a balancing act, it really comes down to it being a balancing act. Like I said, either taking the approach where you're gonna destroy the U.S. dollar, or you're gonna crash the economy. If you look all throughout history, what's happened is they crashed the economy because the consumer, the everyday person, typically, and I think the military term is cannon fodder. Mm-hmm. The everyday person is cannon fodder. The institutions are always protected, and even if you look back when President Obama was in office, mm-hmm. The overarching sentiment was let those institutions fail, and he bailed them out. Exactly. And it took quite some time before there was some time and effort put into trying to build up the economy. So honestly, again, I look at it as it's always going to be that balancing act. And like you said, whether or not they announce one thing in order to see what the reaction is going to be, regardless to what the action has been in the past, they're always going to protect the institutions.
And that is a great point, because you said cannon fodder, and then at the same time too, it's like the people are just collateral damage, and
always have been, always will be.
It seems like their political decisions is not based on the best interest of the people, but based on the best interest of the corporations and stuff like that. And so whatever this decision they're making it to make the rich richer in these types of situations. So and
Michael, I honestly, a lot of times, whether it be to make the rich richer, the bottom line really is to not allow the institutions to fail. Because again, we've seen it in a number of countries. Well, that's happened, and the entire economies have collapsed. Countries have fallen into despair. So it's kind of, and I'm not trying to be pro or con or anything like that. I'm trying to look at everything from a neutral perspective, because if you think about it, if corporations start failing, the first casualty is going to be the people. People are going to get laid off. You're not going to be able to pay your bills. You're not going to be able to buy food, and so on and so forth. So, and I was watching, I hate to mention this, but I was watching an old episode of Star Trek Enterprise actually recently, where it was the season 3 where they were going into the Zindi, conflict and all of that. And one of the guys, they went on the little probe, and one of the guys got killed, and the guy had to explain it to the soldiers, commanding officer, and he was upset. He said even in conventional warfare, the acceptable level of losses is 20%. So there's always going to be a level of acceptable loss, especially in societies. So government is going to be willing to sacrifice a certain percentage of the populace in order to save the overarching, structure of the company or the country that sustains the country.
Right, but that's a perfect lead-in for the basis and the main reason for the uprise of cryptocurrency.
Yes.
Because I don't want to use the word hypocrisy, but just like how we mentioned about how, and it sticks in my mind when President Obama said this, and he mentioned it during the crisis. And he said, well, we can't let the auto industry go under, or we can't let this particular market go under. We can't let this company go under. But as far as I know from what I was taught, isn't that the basis of capitalism? I thought this was supposed to be a capitalist country, because capitalism says that only the strongest companies should survive.
Yeah, it's very competitive.
So, right, or being competitive. So if these companies are failing and they're losing money and they're cheating the public, the citizens, shouldn't they fail?
Yeah, they should die off. Yeah.
Right, they should die off. They should fade away and let another company rise up and take that spot.
That's a good argument.
But the government was the one to step in and say, we're going to save them. And like I know you mentioned, well, it'll be people, we can't let that company fail, or we can't let the industry fail because people lose their jobs. People lost their jobs. People lost their savings. People lost their lives because they couldn't handle what was going on. Mm-hmm. A lot of people lost their jobs. A lot of people lost their houses, bankruptcy, foreclosures. So it depends on who they're trying to save. It depends on who they're trying to make survivable.
Or what?
Right.
What they're trying to save.
Right.
So you're talking about all the things, all the things that are written and known, but we're not talking about the unspoken.
Which is? You're not going to speak about it?
Okay, I'll just put it out there. There is, no matter who, even in certain organizations, military organizations, what have you, there's always a chain of command that goes up to the top.
Yeah.
And even when you think you're at the top, you may not actually be at the top. So there's going to be something or someone that's at the top. And they're not always known or visible.
Yeah, I think some people like to call it the shadow government or something like that.
Something like that.
Yeah.
So perfect point, Mark. Perfect point. For the known. I'll leave it at that.
Okay.
I'll leave it
at y'all. Let's play this video. The rest of this video.
Works in cycles, with debt levels continuously peaking and bottoming in a cyclical form. Gates and Larson recognized that 2021 represented a period of immense speculation. The complete opposite of this is coming, a considerable economic slowdown. In preparation for a collapse in the US stock market, Gates and Larson have been implementing a variety of hedging strategies. One of these strategies includes shorting stocks. Unlike long positions, short positions don't have to be disclosed to the public. The SEC is trying to change this with a new proposal, but until that goes through, we have no idea what stocks Gates is actually shorting. With that being said, we know that Gates has a short position against Tesla stock, because Elon confirmed it himself. Gates touts himself as a strong supporter for sustainable technologies, but Musk believes that his Tesla short position contradicts this. Musk tweeted that since Gates still has a multi-billion-dollar short position against Tesla, while claiming to help with global warming, I guess I have some trust issues with him too.
Okay, I gotta pause it there. Because I kind of feel like that speaks to, what we just spoke about. Even though we have written rule and so on and so forth, what's he looking to protect the most? Even like you said, since Gates still has a multi-billion-dollar short position against Tesla while claiming to help with global warming, I guess I have trust issues with him too. You can say one thing, and even like you mentioned, Michael, the government will put certain things out there to test and see what sentiment or reaction is going to be. But in the end, they're going to adopt whatever strategy they feel is in the government's best interest. Bill, it looks here like he's also going to do whatever is in the best interest of his investments. So,
yeah, that's right.
No, go ahead.
No, I was agreeing with you. That's right.
Okay, good. So I mean, at the end of the day, and again, seeing this through a lens, from personally, from the 60s through the 70s, through the 80s, through the 90s, through the 20s, 2000s, and so on. The old analogy for me comes to mind. The game is still the same, only the players change.
Right. And if I could add on to that, none of these guys are clean. They're, at the end of the day, these are businessmen that got to the level that they got to by doing hardcore, business, shrewd business, some may argue. And the thing about it is that even Elon Musk, let's forget about all the stuff that he's doing with Tesla. Even, actions speak louder than words and show sometimes a lot more about a person's character. And what he did, like when he bought the Bitcoin and then he was hyping up Bitcoin, then all of a sudden, then he when he wanted to, before he wanted to buy Bitcoin, what he did was he caused FUD, or he caused FUD, fear, uncertainty, and doubt, by talking about how Bitcoin can affect the environment, by the mining and stuff like that.
Mining, yeah.
Right. And so that somehow brought the price down a little bit. Then he went and bought it lower. And then after he bought it lower, then he went and shot up the price of Dogecoin. And then after that, I don't have the facts about this, but then you can kind of study the market. Soon after it shot up, it went way back down. So I'm sure if he's as smart of a businessman as we all know him for, he probably sold that top and then went back. But we do have the facts that because of people got back his financial statements from Tesla, which is the company that he did use to invest in Bitcoin. We have seen that he sold 75% of his Bitcoin holdings just recently. And this is the same person that said that he had diamond hands, in regards to he was holding on to his bag and would never sell. So these guys are businessmen, at the end of the day. I don't think they're bad people, but I just think that they do things with the best interest of how they're going to secure their own financial wealth and gains.
Yeah.
Just to throw one thing in there, Mike, Elon Musk, he also backed out of his deal with Twitter.
Oh, yeah.
Oh, did he?
Yeah.
Okay.
Oh, man. And, that is so interesting. And the thing about it is, I heard in some speculation about it on different groups that from different groups that he was trying to find out how many fake accounts are on Twitter or bots and stuff like that.
Mhm.
And Twitter wasn't trying to release that information. Twitter wasn't trying to release that information. And so
Wow.
he backed out of the deal. And then I guess some of the people at Twitter were trying to take him to court because of that or something like that.
Yeah.
And so because they're trying to take him to court, now they're legally obligated, Twitter's legally obligated to provide that information to the court. So either which way, this guy is winning. Now you got to show them whether the accounts are fake and bots or not at court.
I said, it's the game. Honestly,
it's a game. It's a game.
Yeah.
It's a game. And when you understand the game, you understand how it's played, you know how to also manipulate it.
Yeah.
You know, so and for years, people have always, I mean, we're puppets, honestly. When you're on the low end of the food chain, you're puppets. So until you can climb that ladder and you can affect things, and man, I thank both of you guys for the clarity that you brought in these discussions, because honestly, I know the average person doesn't either know about these things or doesn't comprehend this stuff, you know. So we're kind of peeling back the layers and revealing some things. So hopefully, you know, we can kind of move forward and be better off by at least giving some thought to these things. You know, all the things that are happening, you know, not just to us, you know, but that are happening in general.
Gates is already down over $1 billion on his Tesla short position, but he clearly hasn't closed out his position yet. Elon explained how it was 500 million, but then Tesla went up a lot. So now it's $1.5 billion to $2 billion to close it out. Gates and Musk were about to meet to talk about philanthropy, but leaked messages showed that Gates' Tesla short position hindered the meeting from occurring. Gates texted, 7:20 on Wednesday to be clear, to which Elon replied by saying, great. Gates then told Elon that he just landed. Elon said, cool. Do you still have a $500 million short position against Tesla? Gates admitted that he had a short position by replying, sorry to say I haven't closed it out. I would like to discuss philanthropic possibilities. Musk confirms that these leaked messages were true and claims that Gates having a Tesla short position isn't top secret at all. Though Tesla stock experienced substantial price appreciation in 2021, the epitome of the bubble was the rise of NFTs. NFTs like the Bored Ape Yacht Club rose by hundreds of percent before recently dropping by over 80% in 2 months. While there is long-term potential for the Ethereum platform, there's no reason for pictures of apes to be trading for hundreds of thousands of dollars. Gates recently criticized the Bored Ape Yacht Club for the lack of utility that it provides.
I don't know. I mean, obviously, expensive, digital images of monkeys are going to improve the world immensely.
We all agree on that.
And, that's so incredible. Anyway, I'm used to asset classes where, like a farm, where they have output, or a company where they make products. To have an asset class that's 100% based on sort of greater fool theory that somebody's going to pay more.
I'm sorry. I think that's a really good place to stop. Oh man! Wow. Well, you know what?
I think that was a couple of shots at we have the NFT expert over here. How do you feel about that, Mike?
Well, you know what? It's kind of funny because all right, I'm trying really hard not to be cynical, but again, I've been around for a long time. I've been around since before the birth of Apple, since before the birth of Microsoft, and I know how Microsoft got its start. I know how Apple got its start, and let's just say a lot of things were borrowed, and I'm using that term lightly. So, but they at the same time, they look to offer value to the world. You know, Michael, I know you're too young to have actually used Microsoft in its infancy, Windows and any of the other products. Wasn't a lot of value there, you know, but he made a lot of money. So, you know, to actually take a poke at something that is doing the same thing, taking the same path, it's kind of, I don't know. It's again, I'm trying to be a little more PC these days, so I think he should probably rethink that thought.
Yeah. He had some strong words about
some very strong words. Yes.
Well, now we all know Bill Gates' stance on NFTs. Anyways,
well,
you know,
or do we?
Or do we? Yes, we don't know if this is FUD. But any which ways, you know, as the earth doesn't stop spinning, you know, out with the old in with the new. Sometimes it doesn't matter what the other people think.
Yep.
It's the new generation that's gonna cause the new waves, you know, and stuff like that. And it seems like the new generation, they love NFTs. And apart from just the fact that you can sell and trade things on these smart contracts, the smart contracts, you can do so much more with the technology. And that's what I respect about it, you know.
Yes.
And
it's
like
transparent.
That. It's transparent, yeah.
Yeah.
You know. So we have got to a good point about this. Unfortunately, we are out of time. We see that Bill Gates, he definitely does a lot of things because he's a smart businessman, and he's also a very good trader. He has leveraged a lot of his assets into making him more money, you know, and things like that. So it's always a good thing on your own free time to look at what these guys are doing, all the top holding companies and so-called philanthropists, what they're doing and stuff, and just kind of examine them and maybe make, with the help of a financial advisor, make certain estimates about how you can also make gains during this bear market. So on that note, unfortunately, we're out of time. So yeah, awesome. That's all the time we have for today. Thank you so much for tuning in. We really appreciate you. Please do not forget to subscribe, drop the like, smash the notification button if you haven't already done so. As usual, kindly leave some comments in the comment section below, and we'll try to answer them for you. And we'll try to give you that relevant crypto information whenever you need it. Peace.
And more.
And more.
And more.
All right, peace, y'all.
Tomorrow can be a better day if you're looking to get some figures for better pay. Invest in yourself, man, that is the only way. Get your clout up, 100K followers. How you do that, man? By not being a follower. How you get there, man? Hustling and bustling. Then you spice it up, put some brain muscle in.